All right, good morning. It's 7:16. We'll get rolling. As always, if anyone has questions, feel free to message the meeting room or message me, or feel free to just ask a question at any time. Today, we're going to cover soybeans. We haven't really talked about soybeans as, normally it's not as big for us as corn and wheat, but we'll try to go this route today. And if anyone has something they want to see in the future, please let me know. So, start off on weekly price changes. We've seen the big bean rally. The big portion of that was the week prior, but we still saw solid gains in all commodities last week. We had the funds continue to cover and add to their soybean long. It's not quite as big of a long as we saw during the first announcement from Trump for China coming in for U.S. soybeans, but it was good covering for both corn and soybeans, a little bit of selling on soft wheat and hard wheat. The big thing when we're looking at the managed money here, especially on soybeans, I mean, the fund position and the managed money really is driving this flat price action. They're see a headline and they go on ahead and trade it and move these markets in pretty big ways. So it's given pretty good opportunities here, but the volatility, especially in soybeans, is increasing drastically. So the WASD recap, when we start getting to the fundamental side of the soybean market, USDA made no changes to the soybean balance sheet. They made a few small adjustments on corn exports, reducing that carryout, but still above 2 billion bushels, and basically left the wheat balance sheets relatively unchanged. Just another look at the soybean balance sheet. When we look at the carryout this year of 350, it's right in line with the previous 3 years. So nothing drastic here when we're looking at where we're at. They made no changes to the export side, even though China, that discussion was prior to this WASD being released. Looking at how Trump's comments have affected the bean market. I mean, you can see we had that October rally that was tied to the 12 million tons. Now, he tossed out another 8 million tons, bringing the total commitment for the year to 20 million tons to China. And, the market reacted drastically and came in and covered soybeans. So this market is much of a headline news as it is anything. And basically, it's Trump and China driving these major moves. But when we start looking into the fundamental side, Chinese imports right in line with 2023 for this marketing year. The crush volume is the highest it has been in the last 4 or 5 years, especially for the start of the year. And when we start looking at their crush margin, it's basically negative or, little to no profit whatsoever. So they're crushing beans, but they're not making any money doing it. So when we start looking into, you know, the amount of stocks at the port in China, which is at some of its highest levels here in the last 7 to 8 years, and the configuration of those beans being imported largely from Brazil and Argentina. And then historically, the light blue color is the United States. Typically, that's November, which would be new crop into kind of new crop South America harvest, basically into April. So the time frame for an additional 8 million tons is typically in this marketing period for South America, not typically U.S. marketing time frame. When we start looking at price, U.S. beans are not competitive. This rally prices us almost $1 a bushel more than Brazilian beans. And, if it isn't a set requirement between Trump and China, there is no reason for U.S. beans to be going to China. And, on the other side of that, even if we do more beans to China, we likely will see South America take some of the other destinations that U.S. beans have been going to. And, part of this, when we start looking into the production, South America, mainly Brazil, has one of its largest soybean crops that they've had. And, that's leading to very high ending stocks in Brazil, basically steady ending stocks in the United States. And when we start going to the major exporters, total exports, Brazil, the green line, should have one of its largest export programs here since 2008. And we should see a downtrend in U.S. exports. Mainly South American beans are cheaper, and they have plenty of them to compete here with the United States. So what are we seeing for U.S. side? We're actually seeing a bigger increase in meal exports. We've all seen the crush capacity increase here in the United States. So we have to find somewhere to go with that, and that has been on the export side. So that program has continuously been increasing since, 2016, and that program will have to continue to grow to match the increase in crush. So we don't need to export as many straight beans, but this meal market will have to continue to find destinations and convert destinations that used to be straight bean buyers into meal buyers. Did want to touch on how USDA referenced the export picture. I mean, plainly in their WASDE report, they said even if China buys more beans, we'll see exports be shifted to other origins for non-China destinations. So they see the same thing that a lot of us are seeing. U.S. beans are overpriced. So we won't necessarily see a big shift in carryout here as we move forward. Just to look at U.S. exports to China and other destinations, historically, our biggest programs are tied right in line with big Chinese programs. So, this year would be no different. We finally do have a Chinese program. Even if they do a total of, or add another 8 million tons to get to 20, that would just be an additional 295 million bushels, bringing the total somewhere around 750 million bushels for the year, which is right in line with previous programs that we've seen here over the last 20 years. Looking at the exports, crush, once again, is growing here in the U.S., less reliance on having to export beans for the U.S. market, but it is kind of one of those that really can move the balance sheet if we do find a big export program. But looks like the reliance on domestic crush and pushing towards that will help figure out the soybean balance sheet year in, year out. And as we go into crush and kind of looking at how much it has increased, it's up 360 million bushels over the last 5 years. So, this crush capacity and the production of meal and finding meal exports is going to be key to keep this crush margins positive and also to keep the soybean balance sheet tight. Looking at just another look at soybean meal exports, same increase that I showed in a previous slide. We're right on pace to hit USDA's meal export program. So I think this side of the balance sheet is pretty comfortable. It'll be how many beans can we export, in addition to China and stuff to really move this balance sheet. And what I'm trying to get at overall is the rally in futures, is it actually justified by fundamentals, or is this just a headline news? And, as we go through this, you can see right now it looks like it's mostly headline news and going to make a pretty good marketing opportunity for some people. Looking right at the soybean balance sheet, I mean, the balance sheet is comfortable. I don't see any reason unless we can increase exports and not see other destinations shift, that, there's any concerns here in the old crop balance sheet. Another piece to this is the premium cash versus delivery side on the river. We've all seen the spread curve widen out here. So we've had futures rally, cash weaken, and spreads weaken. That tells you it's not a demand driven rally. It's more of just a fundamental or a non-fundamental rally. And, if we saw premiums rally along with this, that would show us that the demand is coming and there is a need for beans up front. Instead, we're seeing the opposite, where spreads are widening, premiums are anywhere from 20 cents below delivery nearby to March is still 13 to 15 cents below delivery. So we're nowhere near what we need to do to squeeze spreads right now. So the spread curve is staying wide, telling us to continue to carry those beans. And as we move forward with a 350 million bushel carryout, it looks pretty comfortable right now. As we look into next year's balance sheet, we're going to need the increase in acreage and a solid bean crop next year to keep the balance sheet comfortable. But if we have trendline yields and somewhere around 86 million acres of beans, the balance sheet will be comfortable again next year. So looking at price over the last 10 years, we're right in the middle ground. Nothing surprising here. If you toss out the Russia-Ukraine event that moved all grains and oil seeds higher in 21 through 23, we're right in line with where we typically should be for soybean prices this time of year. And when we get into planted acreage, we need to look at the corn-bean relationship. Part of this is going to be the futures price. Part will be the premium side. But we're sitting right in this area where, we should see an increase in bean acres, maybe not in our region due to the premium side, but we should see it at least increase for some of that eastern market. Going into price versus stocks to use, we're pretty comfortable. This is for new crop 26, 27 prices. Right now we're sitting about 11.15, and a carry out around 7% puts you right in this same area, the chart on the right. So I think we're in a fair value versus previous years as where we're at stocks to use carry out. So then it's going to come to some of the seasonals, and this is the time frame where we get spring weather planning and then move into summer weather. So we have an opportunity here maybe to see a little bit more of a rally if we do have some crop condition issues. But, we've rallied considerably here over the last couple of weeks. So when we start looking at the best time frame to sell, May, June, July historically is put in the highs. When you put in a high later in the year, it's usually tied to yield, and May, June, and July is likely tied to weather. So the price outlook, what I think we should see is, March price target. I think you should take advantage of this rally, put in some orders somewhere between 11.25 and 11.50. The technical side looks overbought here, at least short term. The last high in November was 11.30. So, we're not too far off of that right now for November beans. And I think it's a good price target right now, somewhere right in this range of where we're at to, take advantage of the rally, market some beans. And then, if we see a further rally, just keep on selling into it. But I think if you sell your worst beans at 11.15 to 11.20, it's not the end of the world on the soybean side. Looking at wheat, we've rallied as well. On the back of the soybean rally, once again, we started to top out here. somewhere in this 540 range. I think you go on ahead, and if you have old crop wheat, look to market some of that during this rally. We're kind of locked in this price range between 520 and 540. So any breakouts outside of that need to be marketed. We're not overly competitive in the world. We're doing our domestic or our traditional routine demand, and we're still overpriced versus other origins, at least at this time. 26, 27, good selling opportunities. You can sell 26 wheat at 560 today. I still think we'll hit 570 to $6, but I think you need to have orders in place as we start getting into the spring. And 27 wheat, we're 623 and we've touched somewhere around 630. So I think good spots to start looking if you're going to plant wheat for 27 to at least have some targets in mind. And the last slide, corn milo pricing range. I mean, we continue to be locked in this trading range. Anytime we get above 435, we struggle to rally anymore. So I think above 430, 435, you look to market some of your old crop corn. And I still think D's 26 sitting in this 455 to 475 range. You need to take a look at, or at least have some orders in mind here over the next few months of price targets, because we have traded below $4 the last 2 years. And if we have a 2 billion bushel plus carry out again next year, we're probably going to grind new crop futures somewhere down sub 415, down around $4 again. So that's what I've got for you today. Here's contact information if you guys have questions. Let me know, or call one of these guys if you need to touch base on anything. If there's no questions, we'll turn it over to Ryan and let him continue with the cash side of the market.
Hey, Biggs, real quick question on beans. How tight would that carry out have to get to see a big move like on your May, July, or anything on these old crop spreads?
I mean, I think you have to start getting, I think I've got a slide of price. There it is. So for us to get below 5% stocks to use is when we've seen some of the bigger rallies, maybe, a couple percentage points lower. So we probably need to get around 300 or sub 300 in carry out to really drive the spread part of it, at least to have more of a fundamental type rally where the market comes in, they have to come in for beans, pay delivery equivalent for them. But until that time that we see the market really need to push for the cash side, it's going to be tough to rally the spread curve.
Thanks, Biggs.
Hey, Biggs, when it comes to headline news risk, I mean, say the Chinese back away from this market, fundamentally, what is the downside risk from a price perspective?
I think you can trade back to that 1050 again pretty quick. I mean, that kind of held last time. That was, we rallied to 11. Let me take a look at a chart real quick. We rallied to 1160 in November. It took a month and a half, 2 months, but we ground back sub 1050 by the start of the new year. So for us to rally to 1140, if they say, hey, we're not going to buy any U.S. beans, we probably go back to that 1040 to 1070 range pretty quick.
I just think that's important when individuals are out talking to these producers today. I mean, with the price action where things are at and having some pricing orders in there, knowing the downside risk if they do back out of the market, I think it's an important conversation piece when you're talking to your producers.
Yep. And USDA didn't change their price to their farmer price in their balance sheets either. So I don't think they really see a big need for rally in values.
Thanks, Biggs.
Yep. All right. Well, if no one else has questions, we'll turn it over to Ryan.